Anand Tandon also joins us on the show right now. Anand, let's begin by discussing the IT pack itself. This morning, HSBC was talking about how there is an expectation of a recovery in terms of spends going forward. What's your take? Is this a sector which can provide that outperformance, or is it going to be that 8 to 15% kind of growth? And one is not sure whether they want to pay a multiple of 30 times for that. Anand, you're on mute. You'll have to.
Yeah, I was saying that, if they deliver 15% growth, it will be fantastic. I think most companies are still looking at single digit, maybe just about double digit kind of growth numbers. And there is nothing that I see on the horizon which predicts that there will be a sharp increase. The IT outlook in the US may have improved, but it is not necessarily for IT services business as such. There is no doubt, again, some amount of tightness in the market in terms of employability in IT. But but you have to keep in mind the statement like Mr. Sundar Pichai is that says that 25% of the coding is now being done by the AI that they have developed. So you will get to a stage where, and not very far in the future, where more and more of that stuff will be done by, at least the programming will be done by machines. And unless and until Indian IT starts focusing more on competence, more in terms of being able to create products and so on, I am rather skeptical on the ability of IT services to continue to scale. There are companies, of course, which are focused on certain products, especially, for example, car technology and so on, given the growth in EV. Some of them may continue to do some better for a while, and since they have a subscription-based revenue, it will probably continue and sustain. But plain vanilla IT services, I think the best is behind us.
What is leading the markets back? It is a combination of banks, it is a combination of Reliance, it's a combination of some few metal stocks. So Naresh, looking at the recovery, the fact that we are falling less, gaining more, when we are falling, there are buyers on decline, and then we are closing at the highest point of the day. So, I mean, we are closing off the day's low. What does that mean?
Rally, gaining some more strength for the next move towards 25,000, 25,200. And the breadth also tells you that, given that the breadth is positive all through the day, we are not seeing small caps take a downtick with a 100-pointed downtick on the Nifty. So the structure is positive. It's indicating leadership could change, momentum could come back, and we'll see possibly till the time we hold 24,300, the bias would be to look at 25,200 as an upside target.
Quick commerce has been the big disruption, if you ask me, for the year 2024, and the latest being Amazon. In fact, they are likely to try the 10 to 15 minute kind of quick commerce deliveries, and that could be a potential game changer of sorts. These are just the headlines which are coming in right now, so we're going to evaluate them deeper. But Anand, I want your take. Amazon is likely to bring in a quick commerce version within 15-minute delivery.
I heard Amazon is getting into it. I didn't know about 15 minutes.
Yeah, I mean, that's what I mean. It's going to be, again, a revolution of sorts, because the SKUs that they have at hands, I don't know how they're going to do that, but that's at least what the first headline that I read is.
It'll be more on select, with different app. It's like Amazon is already in groceries. We don't realize it, but Amazon is there in groceries. So it's not that they deliver everything. Amazon Fresh. So Amazon Fresh has been in groceries for a while.
Yeah.
It's just that they've not been able to scale it up. You want to doing something disruptive for the sake of being disruptive, or can you really have a sizable kind of a market share? Whatever said and done, 2023, e-commerce was introduced. It started becoming big. 2024, it occupied all the center stage. It excited the market. It killed the whole brand appeal which big box retailers had. But 2025, I think it would be about intense competition, derating of some of these stocks, because if so much of competition is coming in, delivery charges ain't going to go higher. That I can telling you. And there is so much of money which already has been raised by Zepto and Swiggy and by even Zomato, 8,500 crore a couple of days ago, that the institutional appetite or the appetite to buy into this entire quick commerce, jaldi delivery theme, I think is getting far from over. Anand, what is your view?
So one, you're right. I don't think you will get players which are coming from non-existing sources. But Amazon or a Flipkart, for example, has their own sources of investment. And if they decide to come in, whether or not they win over the longer term, you may find some of the existing players may continue to do very well, because after all, it is more a question of execution than just money availability. But in the near term, what will happen is that the competition will drive down margins and will make it more and more difficult for the profitability to happen, because at some stage you'll have to raise prices enough to be able to cover the costs. So in that kind of context, near term, I would expect to see that the existing companies also will be somewhat strained in terms of their performance. That doesn't mean that the stock market will necessarily see it as a negative, because over a longer time, I'm sure there will be a couple of leaders that will survive and the rest will decide to move out. But in the near term, I think financials will be a little strained. So I think, again, these stocks which have done exceedingly well may take a bit of a breather from here on. It's been actually very surprising to find that there is a need to buy tomatoes that have to be delivered in the next 30 seconds. But that is it may, it's a market which has exploded. It has one major problem, that it has its own of a seed of its own destruction. If the takeaway from this is that the retailers, the small grocery shops, actually feel a lot more pain than they're already feeling, you may find that the government comes in and starts trying to regulate or find ways to slow that growth down. That could be a bit of a bummer.
I don't know 30 seconds or not, Anand, but you can ask somebody who spends time in the kitchen, and the importance or the criticality of getting that thing when you want it is really supreme. So they do solve a purpose. So that's something I think you need to take on board. Even if not 30 seconds, even if it comes in 10 minutes, it does solve a great purpose there. But that's the
I'm
latest.
sure.
Go
I'm
ahead, go
sure it
ahead.
does, but I'm just saying, for everything, I would imagine a lot of the groceries, etc., would be shopped. I mean, I can understand you have a guest coming in, you want to, get some refreshments out, and therefore you need to quickly buy stuff. But regular groceries, I mean, why there is a premium to be paid for short-term delivery is something that beats me. But consumer behavior is what it is.
Is, and that's showing in the numbers, at least for now. You know what, let's also bring in a quick check as far as what's happening in the markets right now, because there's a bit of a recovery which is underway. IT, of course, is supporting the sentiment, I believe, and then real estate as a pack is also doing quite okay. Kunal, what do you make of this recovery? And we should try and bring up candlesticks as well of some of these. Is it meaningful? Should we pay any credence to it, or same range is what we are maintaining?
No, it's meaningful because it's led by private PSU banking names. In fact, for the first time, yeah, SBI has hit a new high intraday basis, 868. Then you've seen PNB, Canara Bank making a new high for themselves. RBL Bank, of course, on the private sector banking side has come back towards a new intraday high. So it's been led by banking names, and that's why you've seen the Bank Nifty also from negative 40, 50 points is up to almost 150, 200 points. The IT stocks have done exceptionally well. So, and I strongly believe that even from current levels, many of these large cap IT names, Wipro, HCL Tech, etc., they would still look very attractive. In fact, now I think the chances are pretty much on the higher side that the likes of Infosys and TCS, which have been lagging behind by a decent margin from the other larger cap names, they would also start to play a catch up for themselves. So I believe that the market texture is getting improved for many of these sectors which have been performing very well, and within the sectors, the underperformers, even from the larger cap names.
Okay, point taken. Stats review coming in. PSU banking names are definitely perking up. IT is doing its bit. Real estate has been doing quite well for the trading session right now. But on the losing side, what's coming under pressure today? Let's check out some of those names as well. Bharti Airtel is down 1.5%. Reliance continues to be under 1300. L&T is down. Axis Bank and TCS. TCS is that laggard in the trading session, while the rest of the IT pack is doing okay. In fact, the likes of Persistent, etc., have hit a fresh life high. TCS is the one which is underperforming. Anand, wanted your take regarding Reliance as well. I know the next trigger that everyone is talking about, of course, is that demerger as and when it happens. But in the interim, is that going to be a bit of a worry with the kind of expansions that they're doing? There was that report that they're going to come up with the largest ever, debt raise in the last 2-3 years. What's the take on Reliance now?
Reliance has not had a problem in terms of restructuring the capital as and when they require it. A couple of years back, if you remember, there was also a scare that the debt was becoming unmanageable, and then they promptly went and raised a whole lot of equity. I think the number of triggers that Reliance has are so many that you will always find investors who will be willing to invest in the Reliance equity if they so desire. So I'm not particularly perturbed about the debt levels. The investments that they are making in retail, etc., haven't actually managed to generate the kind of enthusiasm that their size should. So at some stage, if that were to stand aside and the performance to improve, that will certainly help as well. Currently, of course, the main business of oil and gas is doing nothing much, and is not likely to do anything much also in the near term. So that's a bit of a drag on the earnings. But otherwise, telecom is exceptional, given that it now contributes almost half or a little more than half, perhaps, of their profits. That's an area that will continue to grow as the prices as to the consumer increase. So that alone will be able to drive the kind of growth that we are looking at in the recent past. Everything else, therefore, is an unknown upside. I would still think that Reliance at this stage looks reasonably priced.
And on what basis are you saying that, Anand? I'm just trying to understand the fundamental thought here. Is it based on P? Is it based on debt? Is it based on cash flows, existing businesses?
It's based on the sum of parts, Nikunj. If you look at each of the individual businesses, I mean, Reliance is difficult to value on a PE basis because the range of business ranges all the way from complete commodity to totally consumer business. So if you look at the sum of parts, I think there is some upside there still.
Nothing big in terms of an incremental move, but I want to go back to metals. We've been discussing metal stocks, this entire China halo factor there. Nuresh, is the trend still alive in metals?
So we are seeing selective moves. So something like Jindal Steel has making a strong comeback. You've seen NMDC give a breakout. So selectively, NMDC is one which looks interesting. Nalco is the other one which has continued to do well. It has not corrected much with the markets as such. So two names which really look well is NMDC and Nalco. The other names like JSW Steel, Tata Steel have not shown a very strong comeback, but they could recover. They've corrected quite a bit. But I would go with NMDC and Nalco on all dips.
Those are top recommendations coming in from the metals pack. But what's the outlook looking like for 2025? That's the question we posed to the experts at BlackRock here, at what they had to tell us.
If you just look at globally, the rate of inflation, one of the most surprising and the most wonderful things that have happened is the deceleration in inflation that has taken place across all DM and EM nations. And that, I think, has been a big driver of consumption across the world. You speak specifically around the US, and as I think about our year ahead forecast and outlook, which we're actually going to publish in the beginning of January, one of the ways in which we're thinking about the world is an outperformance of the US, or a continued outperformance, I should say, of the US with respect to where the rest of the world is. And of course, that's underpinned by some of the macro fundamentals around growth, around the labor market, around deceleration of inflation, and very importantly, around very strong consumption and therefore corporate earnings growth. Some very meaningful ways in which I think 2025 will be different from 2024 is, number one, we are no longer going to have conversations around, is the Fed going to start their cutting cycle? Is the ECB going to start their cutting cycle? We already have begun to see interest rates moving lower from the very restrictive territory that they were in. So that's number one and really important. With respect to the US in particular, as you correctly pointed out, 2023 as well as a part of 2024 was very much a story about just the tech dominance or tech plus dominance. What's really promising about 2025 is that we're already finding a rise of the rest as it pertains to earnings growth and as it pertains to performance, where we're seeing financials as an example, which is a sector that we certainly like in the US, actually outperforming tech based on very strong earnings growth and expectations of margin expansion continuing into 2025.
There's surge in some of the construction stocks, and government spending picks up, L&T would benefit. Government spending picks up, Dilip Buildcon would benefit, NCC would benefit, Ahluwalia would benefit. This really could be a new theme for next couple of, days and weeks to come as government spending will pick up. Hopefully things will start normalizing. Kunal, is there a trade in any of the construction stocks?
Yeah, so I think Ashoka Buildcon is something which is looking attractive from the space. The last 4 weeks I was looking at the charts. I think the rally started off from 225 or 230 levels, and now it's come back towards a life highs of 290 plus mark, and 4 consecutive weeks of very strong volume action backed by, of course, strength in prices for the stock. So looks attractive even at current levels, and with this range breakout, it's almost like a 60-pointer range breakout for the stock from 270.75 as a resistance and then 220 broadly as a support for the stock. We could be looking at the stock migrating to another 60-65 points on the upside from that 275 mark, which means closer to 335 could be a near-term target.
335 on Ashoka Bilcon, that's likely to happen. That's a take coming in from Kunal. But what are the BTSC trades or STBT trades that our technical experts have? Naresh, you go first.
First would be a buy on LTM entry. The stock has given a fresh 52-week high, good momentum here. Stop loss at 65.50, target price of 66.50. Second is a buy on Muthoot Finance. The stock has continued to show momentum after yesterday's breakout. Would expect a dash towards a new all-time high. Stop loss at 2010, target price of 2008.
Kunal, what about your recommendations?
So I'll go with a buy on Jindal Steel from the entire metal pack. Looks attractive at current levels. So targets of 1030, stop loss could be kept at 970. And the second would be a buy on Piramal Enterprise, a classical breakout for the stock about 1200 levels. Continues to move up higher with strength. So look out for targets in the range of 1300, stop loss at 1235.
Okay, so those are the top recommendations coming in as a BTSC trade from our technical experts. Well, SIAT is getting undone, and ditto can be said for VIP Industries, Root Mobile, LIC, Honasa. All of these stocks are down. Kansai Nerolac is coming under pressure, so definitely need to watch out for some of these names. Even Trident, which was otherwise showing signs of strength on that 3,000 crore investment that they were making in Madhya Pradesh, is slightly under pressure right now, at least from the highs of the trading session. Wanted your take regarding this, Anand. The textile space, hasn't been much talked about, but is this something that you like? And I'm not talking about just retail, but the actual textile and spinning companies.
I've been tracking it recently, so I can't comment. Spinning is not an area which is very it's very highly capital intensive. Doesn't get much unless the government is giving a subsidy. So you are really looking at the garmenting space, which is of some interest. That's more a retail play, but as I said, I can't comment on a specific company. It's been a sector which I have ignored for a while.
Actually, a lot of investors have ignored this particular sector because, I guess it was the scale and size that wasn't much. But, we were just discussing about the disruption in the quick commerce space and how Amazon is looking to come out with those 15-minute deliveries now. What exactly is the game plan? Let's try and understand with the company's executive, Amit Agarwal.
I would go back to say that if we were sitting here 10 years later, customers would still want more selection, faster speeds, and greater value. So what you're seeing is a very logical reaction. And right from the beginning, Amazon has been focusing on those three pillars. How do we add more selection? How do we make things more and more affordable for customers? How do we make things more and more fast and more reliable for our customers? So today, if you go and shop on Amazon, we have hundreds of millions of products. I think Prime members can get about 4 million products delivered to them next day. They can get 1 million distinct products delivered to them same day. They can get hundreds of thousands of products delivered to them in a few hours. They can get tens of thousands of products delivered to them in 30 minutes or an hour. So you already get those speeds on Amazon. You just don't realize, you're just always shopping for it. But we do recognize that to make it easier for customers to discover different levels of services, we do plan to launch our own 15-minute delivery offering starting with Bangalore later this year, so that customers could, in a very convenient way, look at all the products that they can get shipped instantly for them. So I would just stay tuned.
And when are you looking at expanding that service into other cities?
I would just say stay tuned. We'll start with Bangalore. We are super excited that we are loved as India's Apni Dukaan by customers. We serve daily essentials for customers across the corners of the country. And as I said, nearly 1 million items are shipped same day, distinct items. So, offering customers more and more selection at faster speed is something that we love doing, and so you should just stay tuned.
If you like this video, then like, share and subscribe to ET Now.